Welcome back. You're watching Market Fatafat right here on ET Now. Let's continue with the stocks that are buzzing. And right now on the technical front, we have Aamar Singh joining us on the show. A very good afternoon to you, Aamar. And the first stock that you're going to talk about is RPG Life Sciences. And this particular counter has been a buzz of late. How are the charts looking right now? Do you see some more elevated levels?
Yeah, I would say that RPG Life Sciences, we've seen a significant rally today, up by almost 14%. And what we look technically on the charts is that the stock is approaching its November 2022 high of 1012. So currently, if we see the high today was 964. So that's going to act as an immediate level of resistance. But the trend for the stock remains positive because the stock has broken out of a zone of resistance around 900 levels.
Okay, keep an eye out on RPG Life on those back of those levels there. But let's move on, talk about IRB Infrastructure Developers. And while this one in focus, we have the toll collection data coming in for the month of May. And post that, we've seen that the stock is surging as much as 4%. The company actually clocked a year-on-year growth of 20% in terms of the toll collections at 411 crores in the month of May is what the toll collections stood at versus the toll collections of 343 crores a year ago. What the management and the company highlighted is that after a promising start in April 2023, the toll collections on the toll collection front, it seems like that the momentum has continued in May 2023 as well, and thus reinforcing the consistency and robustness in terms of the growth across all highway corridors that they manage across India. So yes, as of now, we've seen the stock has given up most of those gains that we're seeing coming in, trading as flat as it would be today.
All right, let's shift focus. Let's talk about SBI and why is SBI in focus in today's trading session here. Morgan Stanley has downgraded SBI to equal weight, and this on back of peaking margins. What Morgan Stanley has done is, like I said, they've cut the target, cut the rating to equal weight from overweight, given its lower relative upside on back of the peaking margins in the industry. SBI, this is SBI's first downgrade since August. What the report stated that while NIMs have largely peaked, they are expecting that for stronger banks, they should trough well above the pre-COVID levels. What else they are saying is they are expecting a re-rating to above mean levels as visibility on the capex cycle improves further over the next year. The ROE to remain strong and at above average levels. Large private banks are in a sweet spot as they have better growth and operating leverage compared to the PSUs, and therefore Morgan Stanley prefers ICICI, Access as well as IndusInd, while they have given a downgrade to equal weight for SBI. So that's why SBI is in focus and is actually declining in trade 1.7% right now.
Okay, let's move on and talk about India Cements on the charts then, Amar. This one has seen a sharp up move in the last 1 month. Just before that, we were seeing a bit of a subdued move and a consolidation coming in there. This run-up that we've seen in the last 1 month, do you think this momentum is going to be continuing, and what is the target that one should keep for India Cement?
Yeah, I would say looking at India Cements, the stock, as you rightly said, was consolidating, and that also was consolidating in a very narrow range between 180 and 200 odd levels. And then we saw a spike above that, and consistently that level was breached. So effectively, those investors who were looking at, or traders, I would say, who were looking at the markets or this stock, they entered above the 200 mark, and what we've seen consistently is that the volumes have also increased. If you look at the average volumes over the last 10-15 trading sessions, that is significantly higher as compared to the previous average volume. So technically, I would say is definitely strong on the charts, and if you look at it, the stock has a potential to rally towards its earlier high, which it had made in September. That was around 262 odd levels. So the stock has a potential to rally. Immediate levels would be around 260 odd levels. If that level is breached, then the stock could trade towards its September highs of 295 to 98 levels.
So that's the take coming in on India Cement. Lisa, HAL, why is this one in focus in today's trading session?
Yes, HAL, it's showing a fantastic move today and it's up around 6%, and not only that, it's It's also hit its 52-week high and an all-time high of around 3,785 today. Let's look at the reason why the stock will be holding a board meeting on 27 June to consider a stock split. The current face value of the share is around 10 rupees, and if we look at the stock split or subdivision of the share, it is mostly beneficial for the company as it will increase the liquidity of the shares in the market. So that's why we can see HAL, it's trending upwards in today's session, and even the last state-run PSU that had a stock split was IRCTC some time ago. So if we look at in the stock performance in the last 1 year, it has gained around 40%, and it was on the back of strong order inflows in the defense sector.
Okay, that's on the back of the news flow. But Aamar, on the charts, HAL, what is the run-up that you're expecting? Because 28% up move in the last 1 month, 37% in the last 6 months. How much more upside?
I would say the stock is definitely is on its dream run. The way the stock has rallied currently around 3,700. And also, if we look at since I would say 31st May, because what we saw on that day that there was extraordinary volumes on that particular day. So we had volumes in excess of 3,657 crores. And that was at a price of anywhere between 3,000 and 3,200. So clearly shows that there is a lot of interest which has been there in the stock, and means recently that interest has increased. So we've seen this sharp up move. The way the stock is trending, and see the best part, what the stock is clearly displaying on the long-term charts, be it the monthly charts or the quarterly charts, or even the intermediate term trend, clearly tells that any pullback in this stock should be used as a buying opportunity because the stock is in a secular bull trend. Now, coming to the levels, the initial level of support for the stock would be around 3,500 zone. On the upside, the way the stock is moving ahead, it has the potential to rally towards 3950, 4,000 in the short term.
All right, moving on then, Ashesha, let's talk about Uniparts and why is this one in focus?
India got listed in December last year, and today lock-in on about 90 lakh shares will be open, which represents about 46% stake in the company, which means these shareholders can now sell their shares in the open market. The stock is off the highest point of the day, perhaps some selling seen. Important to note that ever since it got listed, the stock has risen nearly 6.5%. Today, of course, on the back of lock-in being opened on about 46% stake in the company, the stock is in focus.
Put the spotlight on Just Dial, and Aamar, on the charts, is it dialed up for a further run-up?
Yeah, I would say looking at Just Dial, what we've seen that the stock was consolidating for a very long period of time. Earlier, it was not able to breach the 620 mark, and then once it reached that level, so from mid of April till as recent as I would say end of May, the stock was consolidating. So it was 700 on the upside, and I would say 650 on the downside. So it was trading a very narrow range. But what we've seen that the range has been breached, and the stock is now sustaining above that level. Currently, it's around 758 odd levels. Technically, there's a positive indication on the monthly charts. The weekly charts are extremely strong, and the momentum is there to stay. So this is one stock which, if it sustains above the technical level, I would say is around 800 and 820, because that was a top that the stock had made in June 2019. So that's the immediate top where the stock is meeting with resistance. So that's a level to watch out for, where the stock would rally towards. On the downside, the stock has now got very strong support around the 700, 710 zone.
Okay, keep an eye out on Just Dial and those numbers over there. But moving on to IEX, this stock is in focus. There are a couple of things that have happened. One, we have a downgrade that has come in from Antique, where they downgraded the stock to a sell. And what they're saying is obviously the factors that is leading to the downgrade. One, the spot market price will be higher than the bilateral prices, which are unlikely in the past, which was favorable for the exchanges. Now, other than that, also they believe that this can have an impact in terms of the impact of the electricity volumes on the exchanges going forward as well, and the possibility of a coupling operator can net the power flow within each zone. posing a new challenge for the dominant exchange like IEX as well. Incentives by the competitor exchanges like HPX and PXIL can eat into the volume growth. That's the word coming in from Antique, and they're saying that is why the current market price is disassociated with the underlying changes, and that's why they're downgrading the stock to a sell as well. And furthermore, let's keep an eye out on IEX. As of now, what you're seeing is also in terms of the Ministry of Power has recently announced its decision to go ahead with the market coupling, and the Ministry of Power has directed CERC to expedite the consultation process and finalize the implementation as well. So yes, that's why we're keeping an eye out on IEX today.
All right, that's IEX sulking in today's trading session. Yesterday it was the last hour of the trading session, also a sharp downtick on that particular counter. But one stock that is actually making a comeback is Tata Communications. Aamar, a lot of analysts are talking about this particular stock. Do you think that it merits a relook at, given the comeback that this one is staging?
Yeah, I would say Tata Communications on the charts definitely looks positive. And what we've seen is that a breakout above the 1250-1300 zone, currently it's around 1460. We've seen some significant volume also over the last few trading sessions. But the important point to watch out here is yesterday's high, because now that's going to act as a short-term resistance for the stock that was around 1494 yesterday. But the trend and the momentum is definitely strong. Yes, what we're seeing on the charts is that it's moved into overbought territory. So there's some heated territory, you can say, not only on the daily charts, but even on the weekly and the monthly chart. So that really shows that, and when the stock reaches around a key zone of resistance, so that means that there could be some profit booking coming into. But the trend still remains positive. If we go back in time and see in January, it had made a high of 1591. So initial, I would say, resistance is around the 1500 mark. So if that is taken out, then it is headed higher towards a new high.
All right, that's Tata Communications for you. Let's talk about the sugar stocks. Sweet gains coming in for sugar counters, and that's because you had the sugar futures actually rise most in almost a month, because El Nino's arrival has heightened the supply concern. So in overnight trading session, you had sugar that gained 4% a pound in New York, and the weather phenomenon compounds concerns about the unwelcome rain and cooler temperatures in Brazil and a potential drought for India. We all know that monsoon, we saw a week delay in the arrival of monsoon in Kerala. We are yet to get even a drop of single rain in the city of Mumbai as well. So yes, concerns that El Nino will impact the crop, and that's the reason why the sugar prices have seen an uptick, and that's why all the sugar counters are gaining. Banari Sugars 4%, Dwarikesh 2%, Shakti Sugars 4%, so is Balrampur Chini, Sri Renuka, all of them soaring in today's trading session.
And then let's talk about Bajaj Hindustan then on the charts. Aamar, what are the charts indicating now?
Yeah, I would say that this is one stock which has been significantly beaten down from almost recent as high as 22. It came down to around 8, 10, and then it's back to 16 right now. So what we're seeing is that the stock seems to have broken out of a consolidation zone, because in the month of April, it had made a high of around 15, and then it had corrected all the way towards 13. Now it's trading above that level. And there's also, if we see on, I would say on 29th May, there was significant volumes on this particular day for this particular stock, and the stock is sustaining above the 15, which was an earlier resistance zone. Now that acts as a very strong support zone for the stock. The stock sustaining above the current levels has the potential to rally in the short term towards 18-20 levels.
All right, so that's the take coming in on Bajaj Hindustan. But Lisa, Ether, why is this one in focus?
On a roll since yesterday. The company signed an LOI with US-based oil field service firm, and they gained around 10%, marking its single biggest day gain since its listing. The listing had taken place last year on June 2022. And today, but it gained 7% in early morning trade, and it touched a 52-week high, and that is on the back of it signing a deal with Saudi Aramco Tech for the commercialization of sustainable converged polyols technology. If we look at the current trading price, if we take that into account, the stock is trading 53% higher than its IPO price. And if we look at the analyst recommendation, 85% of the analysts, they have a buy rating on the stock at a target price of 1,119 at a 12-month target price, and this is on the back of capacity expansion. Ather also has market leadership in most of the product portfolio and also a strong product pipeline. So, well, yes, Ather Industries is in focus on the back of these reasons.
Okay, and let's move on and talk about JBM Auto. Amar, looking at the charts right now, I'm a bit stumped because from 400 levels, it's reached 958, 960 levels just in 6 months. And what a sharp up move already seen in the stock. Would it be some profit that you would tell someone to book, or maybe still continue to buy the stock?
No, at the current levels, fresh entry, I would say, would be slightly risky, because the risk-reward ratio, you always have to look at the trade from a risk-reward perspective. What's the risk that you're taking, willing to take, and what are the reward expectations? But yes, what we've seen is that the stock has breached its earlier around the last week of April. It had made a high of 840. That was acting as a short-term top for the stock. And post that, the stock did consolidate, and it came down to the 770, 780 levels. And then the stock rallied above that level, reaching the 840, 850 mark, and currently it's around 940. And we've seen some significant volumes also happening over the last couple of days. As far as the trend is concerned, this is again one of the stocks where the trend, even on the long-term charts, is extremely strong, and the momentum is there to stay. So effectively, it means even the intermediate-term trend reflects the same. So effectively, it means is that any pullback in the stock can be very well used as a buying opportunity. And those who are long and those who've been long in the stock, they should look at least booking part profit in the stock. Now the stock has got a very strong support coming around the 800 mark, and I would say around 750, 800, that's a very strong support zone for the stock.
Right, moving on, let's talk about Havells. Ashesha, why is this one in focus today?
Muted commentary has come in from the management. The stock, in fact, is sitting with a cut of nearly 0.5% as we speak. In a Morgan Stanley report, management has highlighted that B2B revenues that are linked to government infra and real estate continue to drive growth. However, B2C demand could remain subdued over the next couple of quarters. ECD segment should see improvement contribution margins due to lower commodity prices that have been prevailing for the last many quarters. However, they believe that competition is likely to stay at elevated levels going forward. So muted commentary has come in from the management with respect to competition as well as the demand, and that is the reason the stock is in focus today. It is off the highest point of the day, and as I mentioned, it is sitting with a cut of nearly 0.5%.
Okay, let's move on and talk about NIIT. This one is in focus as well, and the demerger happened of the company on 8th of June, ex B2B business. Let's listen into what the management had to say about it as well.
Unexpected concern in the IT sector of changes in the environment and so on have got them to stall on their people addition in the last quarter. And that happened a bit unexpectedly. So what tends to happen in such situations is that activities like training get affected in the short term. But companies have to run, they have to exist, so it's a matter of time before it comes back. So the last quarter did appear unexpected because it's only in November, December, really speaking, and then more in January and February that most of the IT companies started talking about the fact that they were going to take a bit of a pause on adding people. And globally, in some of the very large companies, that they have been, reducing the headcount, and that is for different set of reasons as well. They expect more automation to happen in some of the tech companies. Last year, as you know, we've grown very well in the individual business as well. We've grown very well. It's only in the last quarter that this unexpected blip happened. We were running at almost 90 crores. A quarter came down to 60 unexpectedly, but it's not gone away. It comes back in a period of time, and we expect that this coming quarter we are in through is again things are beginning to get better. But second half, as we've said, we expect that to come back because after all, companies have to carry on with it. They have to learn new things, and for us.
All right, so that is what the commentary is coming in from the NIIT management. They joined us today on ET Now to talk about that. But let's move on. Amar, let's talk about Ajanta Pharma. How is this one looking at the charts to you?
I would say that the stock has reached a crucial zone of resistance, which was around 1300 level. Currently, it's around 1435. Technically, the stock is strong on the charts. So any pullback in this stock can be used as a buying opportunity. So the level to watch out for the stock is around 1370, 1380. That's a very strong support zone. But for any further rally, the stock needs to break its or breach its 1509 high that it had made yesterday. But looking at the charts, the short-term and the intermediate-term trend and momentum remains very strong for this stock. A long-term trend is more or less, if it sustains above 1500, then it could head higher towards the 1570, 1580 mark.
All right, that is the take coming in on Ajanta Pharma. Let's talk about Quest Corp. They held a management meet, and Antique Broking actually came out with a report on that. They said that they recently met the management of Quest Corp to get a sense of the staffing industry and the company's strategy going ahead. The stock has been under pressure during the past year, largely on account of disappointment around margin contraction. However, the management has been focusing on reducing exposure to non-core segments, expanding market reach and minimizing losses in the platform segment. The company also has trimmed its exposure to government projects and has not been bidding on the new government projects, as these usually entail a very high DSO days, and it has now only one project in the hand which will close by March 2024. Overall, the company is expecting revenue to grow at double digits in the near to medium term, and similarly the management expects consolidated margins to improve from current levels with a change in the portfolio mix, optimization of overhead costs and reduction in the losses from the platform segment. The management also said that they are expecting EBITDA margins to improve by 100 basis points to 4.5% in the medium term, and therefore Antique believes that the stock trades at an attractive valuation with better risk reward, and that is the take that they have come in on that particular counter. No doubt they've not given a rating as such on the counter, but they are positive on the stock. So that was Antique meeting with the Quest Corp management and their takeaways from that.
Okay, let's move on to stock number 38 and Fine Organics. Amar, this one has seen a correction from the 6,000 levels to 4,000 and now trying to come back and somewhere around those 5,000 levels. Can we expect it reaching that 6,000 level anytime soon now?
I would say that, the stock is looking positive on the short-term, intermediate-term trend, but the long-term charts clearly shows that upside is going to be met with resistance. Now, the level to watch out for on the upside would be anywhere between, I would say, 5,400, 5,500, because the long-term charts, when I'm talking about the long-term charts, I'm referring to the monthly charts. They clearly show that the stock has moved from the oversold territory and can rally towards 5,400, 5,500 level. That's going to act as an immediate zone of resistance for the stock. And if the stock is able to sustain above that level, then we could see some further upside to the stock. Otherwise, more or less, it could trade in this range.
Okay, that is Fine Organics for you all. Keep an eye out on that level. But let's move on and talk about Map My India. Why is this one in focus? There was an analyst meet which happened yesterday. There's a lot of positive commentary that is coming from there as well. And in terms of the revenues, the company is saying that they're aiming around 1,000 crore revenue by FY 27-28 from just 282 crores reported in FY 23. That's a CAGR growth of 29% to 30% as well. They're expecting an overall improvement coming in over there as well. And that is why we're seeing that the stock is buzzing in trade after the positive commentary that has come in from the analyst meet and a strong bullish outlook and target for the revenues as well.
All right, let's move on to stock number 40, Lisa, KPI Green. Why is this one in focus?
Orders that the company has received. It got a commissioning certificate from Gujarat Energy Development Agency for wind solar hybrid power project, and the approval is the second that they have received in the last 2 days itself. Just yesterday they received a commissioning certificate from Gujarat Development Agency again, and that is for the wind solar hybrid project. So the stock had zoomed around 7% in early morning trade, and it also touched its 52-week high at 575.35 per share. Even on 7 June, the company received a single largest LOI for capacity from Anupam Rasayan Limited. So, well, we can see that this showcases the company's strong position in the renewable energy market. That's what the management said. And even the last 5 days, because of these back-to-back orders, string of orders that they have received, the stock has surged around 12%. So that's why we can see that the stock is in focus today.
All right, so that's the reason why KPI Green is in focus in today's trading session. Moving on, Aamar, Mahindra Cie. How are the charts looking for this one?
Yeah, I would say that this is a stock which is definitely very strong on the long-term charts, be it the monthly or the intermediate-term trend, and so you can see that it's in a secular bull market. So any pullback in the stock should be used as a buying opportunity. What we are seeing here is that the stock has breached the crucial zone of resistance earlier, which was around 490, 500 levels. The stock is sustaining above that level. So it's very crucial that the stock needs to sustain above the 500 mark. Then the stock has the potential to rally because it's trading at its all-time highs. So then the stock has a potential to rally towards 540, 545. On the downside, the stock has got very strong support coming around the 450, 460 zone. And also what we've seen an interesting aspect is on 24th of May, we saw significant volume, almost 920 crores, which is exceptional volume happening on that day. And post that, we've seen this sharp up move. So that also should act as a very strong support zone. So 480, 490 is going to act as an immediate zone of support for the stock.
All right, so that was indeed the last stock. Thank you so much, Aamar, for joining us on the show. Thank you, Vaishali, as well, and Lisa and Ashesha as well for joining us on the show. And with that, we come to the end of this week's edition of Market Fatafat. It's a goodbye from Winnie, myself, our producer Snehi, our director Trevor, and the entire camera team. Thank you so much for watching us. We will see you next week at 1:30 p.m.
राशि की स्कूल फीस, घर का किराया,